Most operators I talk to aren't struggling because business is down. They're struggling because they don't know what's going on inside their business. In many cases, demand might be up, cash is coming in, and they have a bookkeeper or an accountant, but they're constantly surprised by excessive owner payouts or taxes owed or unexpected expenses. So if you've ever said, we have money coming in, but it doesn't feel like there's anything left at the end of the month, then this video is for you. Now, if you're new here, my name is Adam Knight. I'm the founder and CEO of Recreation Stays. We're a hospitality management company based in Seattle, and we operate independent hotels and luxury vacation rentals. And I can tell you what we're talking about today comes from personal experience. These are hard-learned lessons, even from a seasoned operator. And before we jump forward, I think it's important to recognize what accounting should be for you. Now, everybody knows it as the department that hopefully gives you a P&L. We'll talk about that in a little bit. Accounting should not just be a lag indicator, or in other words, reporting on things that have already happened. Now, that's important, but they should be a department or a person who can help you see around corners. They should have the information and be able to synthesize it for you in a way that allows you to make better strategic decisions. That's how you should be looking at accounting for your business. And one of the ways that they do that for you is by providing a monthly P&L or a profit and loss statement. You should be getting one of these from your accountant every month. That's a non-negotiable. And if you're not getting one, you need to press them for it. And we actually found ourselves in a situation like this at the end of 2024, where the accounting firm that we were using wasn't providing one. And we would press for it, and they would say that they were working on it or they were just cleaning something up. But inevitably, the next month would come and we still wouldn't have a P&L. The problem was that we were ultimately flying blind. We had no idea what was going on financially in the business, and this got us into a lot of trouble internally. Thankfully, it didn't affect any owners, it didn't affect any vendors, but we had to do a lot of scrambling every month to figure out what we were able to do and what we weren't able to do. Now, we ultimately moved away from that accounting firm, and we had to bring another one in to fix all of the work or the non-work that previous company did. And we're in a great position now, but that was a hard lesson learned in that we put up with that non-negotiable non-delivery for way too long. After the first couple of months, we should have just cut and run, and we didn't. We gave them the benefit of the doubt for way too long. So if you're in a similar position, you've got to really evaluate who you're working with and press them. And if you've been pressing them and they're still not able to deliver, you need to move on and find somebody else. Now, the second piece about a P&L and how accounting works is that they should be following accrual-based accounting. And I can see, like literally through the camera here, that your eyes are glazing over. I want to just talk about what this means really quickly and why it matters. So there's two types of accounting that could be followed: cash accounting and accrual accounting. Cash accounting is just recognizing the money as it comes in immediately. So if you got a reservation that came in that was made today for 3 months from now, if you recognized the cash that came in for that booking today, even though it's for a few months from now, you would be following cash accounting policy or cash accounting rules. What they should be doing is accrual accounting, where you recognize that booking revenue that's coming in 3 months from now, 3 months from now after the booking checks out. Why that matters is for cash management. If you were to take the money for the reservation that was made 3 months from now and use it in the business today, if that guest was to cancel their booking, you'd have to refund the money. But if you already took it into the business and spent it, you wouldn't have that money to give back to them. You would have to find that money somewhere else. So when you get revenue coming in for a future booking, you can't look at that as money that you have to spend today. That has to be sequestered away in a trust account and can't be used until after the guest checks out, because then you know that you get it because the guest stayed. So if your bookkeeper or accountant isn't following that style of accounting, accrual-based accounting, you need to demand that they do, because that could be the root problem for any cash management issues that you could be dealing with right now. Now, the second point that your accountant needs to have responsibility over and that you need to have oversight on is money that isn't actually yours that's sitting in your bank account. Now, we just talked about reservation income, so money coming in today for a reservation made a few months from now. That's one type of money that's sitting in your account that isn't yours yet. Another one is future tax liabilities. So you're probably taking in occupancy taxes, you're going to owe income taxes or sales and use taxes every month or every quarter, depending on your setup. Your accountant needs to be taking those funds every month and putting them into a separate bank account so that you don't spend them. Those funds aren't yours. And this is where a lot of operators get into trouble because the bank balance looks fine, but all that money sitting in that account isn't yours. It needs to kind of be chopped up and divided into different sections and then squirreled away into different bank accounts that serve different purposes. Future owner payouts is one of those. Taxes is one of those. Sometimes deferred maintenance is one of those. Sometimes owner payouts or owner distributions, your own, like if you're the owner of the company, your distributions or your owner draws could be one of those. I recently watched a great video by Ryan Deese on YouTube about how to set this up. I'm going to link it below because it shed a lot of clarity for me on how this is supposed to be set up. And we took a lot of the advice that he gave in that video and put it into place for us, and it changed the game. The third item is that your accountant needs to be raising the flag when something looks off. And the one that usually creeps up is cleaning fees. So in the short-term rental business, you're taking in cleaning fee income, and then you're almost certainly paying out cleaning fee expenses. So you've got money coming in and money going out that are sort of in the same category. And we started running into this earlier this year where the numbers between the cleaning fee income and the cleaning fee expense were not lining up. They were off in some cases in some months by several $1,000s. And that was affecting everything downstream on the P&L by the end of the month. So we had to do kind of a deep dive and figure out what was going on. And what we found was that the payment timing for invoices from cleaners was bleeding into future months. So we might take in cleaning fee income on a reservation this month, but we didn't get the invoice from the cleaner until next month. And so the cleaning fee expense wasn't booked until next month. And that goes back to the first point about accrual accounting. It also works in reverse, and how you recognize expenses and what month they fall in is really important because it can affect your whole profitability. So making sure that things line up like that in a way that makes sense is a really big responsibility for your bookkeeper or your accountant. And if they're not helping you see those things, that could be a big red flag. And then the last one, and the one that's probably the most important, is cash management. And there's a quote out there that goes something like this, that profitability doesn't pay bills, cash pays bills. Lack of cash is what kills businesses. And how that cash moves in and out of the business every month often dictates success, regardless of size or scale of business. So what your accountant needs to do is help you understand how cash actually moves through your business, when it comes in, when it goes out, where it's coming from, where it goes, the timing of it. And they should give you a breakdown at the end of the month of how much cash goes to what part of the business. How much cash is a future owner liability, a future owner payout, in other words, a tax liability, a debt payment, and how much you can take for yourself. And where this usually shows up, I've seen it with operators before, is that it starts drifting into increased credit card debt for the business. And it's not because business is bad. It's because their cash management or cash timing isn't working. So they end up paying business operations on credit cards and then getting behind on credit card payments. And then credit cards start hitting the limits and you just get more constrained and things just feel tighter and stop working as well as they could. So cash management is a huge one. This is where you need to spend a lot of time. Now, paying bills and paying owners matters, of course, but those are execution tasks. The real value and where you need to leverage your accountant is in insights, control, and decision clarity. So as we wrap here, let's do a little gut check, a little self-diagnostic, so you know whether or not you've got an issue that needs your attention. The first question you should be able to answer every month is, can I explain my P&L in under 2 minutes? Do you know how much cash in your bank account is actually yours? Can you spot a cost problem without opening a spreadsheet? If any of those feel a little fuzzy, this isn't a market problem. This is an accounting system problem. Now, we've done a pretty good breakdown of a critical system inside your business. If this sort of operator-led breakdown is useful, let me know in the comments and I'll post more videos like this.